HCL Tech has come out with its fourth quarter earnings, and as always, they surprised the street and beaten the estimates, especially on the bottom line. To talk to me about the earnings posted by HCL Tech in the fourth quarter, I'm joined by Mr. Anant Gupta, the CEO, and Mr. Anil, Chanana, the CFO. Thank you, gentlemen, for joining us on NDTV Profit. Mr. Gupta, revenue growth of about 1%. Are you happy? What was the volume growth like?
I think we are happy with the quarterly performance. Our growth was 2.5%. If you really look at the whole year in perspective, and that's the way I look at it, it's been a milestone year for us. We crossed $5 billion in revenue, up 14% at 5,360 million. If you look at our net income, it crossed $1 billion in the year. If you look at our deal bookings, that crossed $5 billion of booking throughout the year. So from an overall perspective, I think the year has been very good, and the quarter as well has, been there. Consistent performance over the 4 quarters of greater than 3% growth rate. This specific quarter, 3.4% growth rate.
Right, Mr. Gupta, looking through your earnings, we've seen good traction coming in from Europe, and US business has also done well. What I'm trying to understand is now we're done 6 months into this year. For most of your clients in the US and Europe. What kind of demand outlook are you seeing now? Is it robust? Because there are some concerns about growth in Europe stagnating. How have you managed to do so well in Europe? What is the outlook like from your clients?
In a simple statement, I would say the pipeline that we have at this point is higher than the pipeline that we had in the quarter in the previous year. So I see the market still very bullish. If you look at all reports on different segments, so if you look at the ITO market, the reports pretty much still communicate that there is significant traction in the rebid market, whether it's Europe and whether it's the US, both of them very large. In fact, select countries within ROW itself, the rest of the world itself, are also showing good traction. So I think the rebid market is still there, and it's very strong. If you look at some of the discretionary spend, especially around digital solutions, that continues to track well. The deal size is obviously not as large as some of the IT outsourcing deals, but nevertheless, they still show us a strong positive trend.
Right. Mr. Chanana, talking about the margins. Now, last time we met, you said, once, deals move to mature stage, you have margins looking better. Now, if I look at the margin outlook, your EBIT has gone down by 1% on a sequential basis, but your net profit is higher by about 13%. Is it because of your higher other income, lower tax provisioning, and the forex, the currency movement, which has helped you? Is this the main reason?
So I would not ascribe, some of the things you said just to that. I think the operating performance has been very good. If you see the currency, in fact, the rupee appreciation impacted the margins by about 60 basis points, which we could recoup. In fact, our hit is only 40 basis points instead of 60 basis points. And even below, through the currency management, we could limit our losses to just 9 million this quarter, opposite 23 million last quarter. And our other income was better because the treasury funds have increased now. We have $1.5 billion of funds. So that is leading to other income. So I think on the whole, if you look at 3.4% revenue growth, but for 16% net income growth. So that's what we have demonstrated.
But Mr. Chanana, there's so much skepticism about whether you can keep up your margin performance, because this happens quarter after quarter. No HCL Tech can't do it this quarter. The SG&A expenses cannot be cut further. You still cut them this quarter as well. Last time you said you will continue to make investments in your marketing and sales. Going ahead, you'll have wage increases as well. So what happens to margins in the quarters ahead?
So what we are doing is we are sort of looking at the elements of SG&A. SG&A has various elements. If you look at one of the elements is doubtful debts. So you sort of manage your debts very well and reduce that expense. So this is what we did this year. We significantly reduced the monies we used to earmark for the purpose of doubtful debts this year as compared to last year. So we gained there. Plus, we did facilities consolidation, which also led to some benefits. Okay. So we keep on looking at and invest in the sales and marketing. So our spend on the sales and marketing is only going up. It's not going down.
So, Mr. Gupta, when it comes to all the investments you've made in your sales and marketing, how much does it help you? Because there is a cost involved on the bottom line. But on the top line, has it evened out or made it even better for you? Because I want to try and understand what is the kind of traction you're seeing in your alt ASM Because you have been investing here, this is a new offering.
Sure.
And what is the response to your digital system integration?
Sure. So first, at an overall level, $5 billion of booking tells you where the performance of the sales and the marketing engine, right? So $5 billion of booking, $750 million plus, obviously fourth quarter higher than that, is a phenomenal story. Now, where is it coming from? We kind of articulated that we have three focused themes around application and infrastructure areas. They're all tracking very well. So enterprise of the future for IMS continues to do well. Like you mentioned, the alt ASM is again has been a very strong booking, has seen significant booking performance for us. So that is tracking very well. If you look at our services around engineering services, that continues to track very well. In fact, they've shown 3.4% growth just in this quarter. So I see these three areas continuing to drive significant amount of traction from a booking standpoint. This is where you get the large deal bookings coming from. On the other hand, you have digital system integration, which is something we launched earlier this calendar year. I think that's tracking very well. We had about 4 engagements which we've signed up during the first half of this calendar year, and I'm hopeful that we will continue with that. It's still a long way before digital system integration will become the main theme for us. It's really, and that's why we continue to invest in that specific area. And if you really look at it into the vertical segments where it's really going, there are 2 momentum segments, financial services and manufacturing, which both put together constitute about 60% of the global IT spend. Both of those segments have grown very, very well for us. In fact, industry leading, I would say. 22% on financial services and 18% on manufacturing. So that's where you're really seeing the performance of some of the new repositioned Gen 2 outsourcing propositions that we put.
What were the deals like, new deals that you won in this quarter? When it comes to their size, how many big deals did you bag? And what is it like? Is the competitive intensity quite a bit when you go for bidding for such large deals? How do you offer your clients a value proposition to say, we'll go with HCL Tech?
So I think a zero defect transition is one key differentiation for us. The fact that we have 98% renewal rate in the last, historically, it's a phenomenal track record compared to an industry rate of 65%. So that kind of tells us that what we pick up, we execute and deliver to on a continuous basis, which is what drives the value proposition at the end. We deliver to what we book and sign up to. So I think that continues very well for us, and that will continue going forward as well.
How many big ticket deals did you sign? Because if I remember right, at least you had
during the year we signed about 50 plus transformational deals in there. So I think it's been a phenomenal performance.
Right, Mr. Chanana, what about pricing power? Is it still pretty intense? Because if this discretionary spending outlook looks better, would you then have more pricing power?
I think the pricing, we haven't seen any significant change in the situation on pricing. I think it's more of a value proposition to the customer. Customer doesn't buy basis, am I offering a $12 per hour rate or a $25 rate? He's buying basis. What exactly is the difference I can make so far as the customer is concerned?
Right. When it comes to the margins for the coming year, FY15, what kind of outlook can you give us? Because you will affect wage hikes in the coming quarter, right? Plus, you mentioned investments in sales and marketing. So, what kind of profile would you be looking at?
I think we will sort of look to balance our profile in a way that we can keep enough money for the purpose of investing in our business, at the same time able to return monies to our shareholders.
Okay, but at least give me a number. I mean, because there is an estimate. Everybody says that such high growth rate for margin improvement cannot sustain on a quarter-on-quarter basis. What do you believe, and what is the range at which you will be looking to post margins by the end of next year?
I think we haven't kept any margin. We are very confident on our delivery model.
Just a range.
We are very confident on our delivery model. And
can I assume it will be between 25 to 30%? Any numbers, any range?
I think the important point is, and it's important to realize, we're all, you asked the question, is Europe subdued from a outlook perspective of US? I think, if you look at whatever reports, whether it's Gartner, whether you look at ISG, so whether it is around discretionary spend on digital or large-scale IT, I think the market is there. And, and we've always used these periods to acquire marquee customers transition them into steady state, deliver the value proposition, the benefits that we promised to them, and then reap the growth from there. So our prime focus will be on that, right? And therefore we will not do anything which will compromise, acquiring the selective clients and services that we would like to do. At the same time, we will continue to invest in the two strong areas, actually three areas: the enterprise function as a service, engineering and R&D services, which is around IP monetization, and third really around the digital system integration stack. So we will continue to invest in there because we believe that these three still are, significantly far away from the potential that they provide to us going forward.
One last question, Mr. Gupta. You said you're seeing 98% renewal. So when you go for the rebid market and the new clients as well, when you end FY15, what kind of run rate would you like to maintain in growth terms in your top line?
Sir, I didn't get the question.
My question is, by the end of the next year, what kind of revenue growth are you expecting HCL Tech to clock in?
That's again, we don't give a guidance on that. So I was trying to get a little clear what the question was. But if you look at the renewal rate, 98% is the renewal rate for HCL. That is, we've also been in the marketplace for over 10 years now. We've seen those deal signings which we did in early 2000s, and therefore we track as to what is the customer wow we're delivering in there, and therefore our customers renewing with us. Are we repositioning the services we offer to them so that they're relevant and they don't have to look somewhere else, right? And then therefore we continue to focus on that. So 98% is our renewal rate, whereas the industry is anywhere between 65 or thereabouts. So that will continue to be our focus. If you look at two specific metrics, one is our CSAT. That continues to clock very well for us. In fact, we had 11% growth in that CSAT index for ourselves. If you look at our client movement, we added 1, 4, and 16 customers respectively in $100 million, $50 million, and greater than $20 million. So the cross-sell of other services into these is an extremely important thing. If you look at the third indicator, which is fixed price services or outcome-based model versus a time and material input-based model, that needle has moved from 52% in the last fiscal to over 56% in fiscal 14. And these will be areas which we will continue to drive. At the end, if you put all these three things together, they really deliver the customer wow, and which is why customers will be with us.
All right, Mr. Gupta, Mr. Chanana, thank you so much for speaking to us at NDTV Profit and giving us more details of the earnings posted by HCL. Thank you.
Thank you.